Ladies and gentlemen, good afternoon. I wanted to take this opportunity to explain the cost of sales. Now, yes, you can always SWOT it, how to calculate it, but I think it'd be easier if you understood the numbers, how they came about, how they're used. So this short video is just to explain how the elements come together. Now, in this question, your year end is November 30th, 2012. This is the last day of the financial year. It means that the first day of this financial year was December 1st, 2011. December 1st, 2011. Now, on that date, December 1st, 2011, the organization had $10,000 of stock in their warehouse. This is the opening stock, and it's the first figure in your cost of sales calculation. Now, this opening stock was stock that they bought from the last financial year that was not sold by the end of that year, and so it came over on December 1st, 2011 as the first day in this new financial year, and it came over as unsold stock. It is therefore hoped that during the financial year that now ends November 30th, 2012, that this opening stock will be sold, that it will be sold. So this stock in the warehouse represents a part of the goods that are available for sale. All right? You can sell from them. Then you have another set of goods that were purchased during the year, and this came to $82,345. So from December 1st, 2011, all the way through to November 30th, 2012, Dory the Bird bought $82,345,000 worth of goods. Now, because in some instances the vendor didn't drop off the goods for her, she had to pay $1,250 as transportation cost to get the goods from where the supplier had it to her business, to her shop, her store, her warehouse. So this carriage inwards has to become a part of the cost of the goods that she happened to buy that day. All right? So the return inwards adds to the value of the goods. So we add it to purchases. Now, at some time throughout the year, Dory the Bird purchased goods but changed her mind and did not want them anymore. So she had to send them back to the supplier, and that is called return outwards. So when these goods are returned, they reduce the amount of stock that is in the shop for sale, which is why the figure returned outwards is bracketed. It shows that it is going to be subtracted from the purchases figure. So inside the purchases figure of $82,345 are goods that were returned, and they were valued at $2,300. So they are to be removed from the purchases figure, which is why the figure is bracketed. Then, when Dory Bird buys stock as purchases, sometimes the supplier wants her to pay quickly, and what they do to induce her or encourage her to pay quickly is to give her discounts. So let us say that she bought $10,000 worth of goods, which would be sitting in purchases. The supplier might say, hey, give me $8,000 and I'll write off the $2,000 so you don't have to pay it. This $2,000 we refer to as discount received because Dory received it from the supplier. And what is the effect of it? It reduces the value of the goods. So rather than having it in her books as 10, which is what she bought it for, it's going to now be recorded as 8. It's the same amount of goods, but she's getting it at a cheaper rate because she's paying for it early. All right? So this discount received has the effect of reducing the value of her goods. So rather than having it on her books now as 10, she's paying 8 for it to clear her bills. So the $2,000 that has not been paid is a discount, and she's saved having to pay that. And that has to be removed to help to reduce the value of her goods. All right. Now there is another piece of information that should be in there called drawings. Now drawings represents what the owner takes out of the business for personal use, and it can be in the form of cash or goods. If it is in the form of goods, then we would need to insert a line into that section of the document. So let me insert a line now. So insert, row above, and I'm going to call it drawings of goods. So if anybody takes money out of the business, takes goods out of the business for their purpose, then you would have to record it here as a reduction of the value of the good because you've taken it out, and it cannot be sold because it's not there anymore. The owner has taken it away for personal use. So any drawings in the form of goods must be removed. Right, so I'm just throwing in this $1,000 to show you how you deal with it. So at the end of the day, that $82,345 of purchases was increased due to transportation cost by $1,250, reduced because of returns, because the owner took out goods as drawings, because of discounts. So the net figure would be $77,895. It means, therefore, that when you look at all the goods that the Dory Bird now has available to be sold to the public, it is made up of stock she had from last year, which is now in the current year, valued at $10,000, stock that she bought during the year, which after all the adjustments comes to $77,895. So the cost of goods that she has available for sale is $87,895. So that is what she had, whether through unsold goods from last year or what she bought. And this represents COGAFS, cost of goods available for sale. But not all of them will be sold. And so any unsold stock must be removed as closing stock from this figure. And so we end up with a cost of goods sold figure of $23,895. So the cost of sales heading that we have here, that heading, this is its value, $23,895. And that is how we calculate the cost of goods sold.